Right guys, so this video is going to be a very comprehensive risk management tutorial that you can always go back to and watch to better understand how risk management works when you're trading, whether you're trading by yourself or you're trading a signal. So these are the two signals that we're going to use for examples. So these are two limit orders. We're going to use them as examples for limit orders, and secondly we're going to still use them as examples for market orders. So now the first thing I want to start with is how to get your stop loss percentage. You understand? Now you can see a trade sent in like this. It comes in with the stop loss percentage, but still I want to teach you guys how to get that stop loss percentage. So now when a trade comes like this, a limit order, and you want to get your stop loss percentage, so the first one, we're going to use a short sell order as you're trying to predict that the market is going down. So when you see a trade like this, first thing you have to take note of is your entry and your stop loss. So this is a short sell order, which means your stop loss is above your entry price. Another thing I'm going to add to this video is I'm going to show you guys how to draw your profit and loss ratio using TradingView. I know that I've not taught you guys about TradingView, but I'm going to just do it here to make a point and show you guys something. So let's just get to the calculator. Let me show you how to calculate your stop loss percentage. That's the first thing that we are going to start from. So this is a short sell. The entry is 0.6131. while the stop loss is 0.6425. You see what I got here is 4.8%, but I'll show you how I arrived at that. So first of all, go to your calculator. So if you remember, the stop loss was what? 0.6425. So what you're doing is you're going to subtract the entry from the stop loss, because the stop loss has a higher value, because this is a short sell. Stop loss has a higher value, so you're subtracting the entry from that. So that's 0.6425 minus your entry, which is 0.6131. So this is what you get, 0.0294. So this value that you get, you're going to divide this value by your entry price. So it's divided by 0.6131, which is what you get, 0.0479. So this is like the percentage, you understand? But to get it in percentile, you multiply by 100. I'm sure those that understand math knows what a percentile is. So multiply this by 100, you're going to get 4.79, then you approximate to 4.8. So that's exactly how I arrived at 4.8 as a stop loss percentage. That's exactly what you just need to do. So let me quickly do the same thing for the long buy to show you how to get it for the long buy. So if you recall, for the short sell, I subtracted my entry from my stop loss, because it's a short sell. I'm predicting that the market is going to go down. So the market will go up, and if the market goes up, I'm going to be making a loss. You understand? So that's why the stop loss is higher than the entry, and you subtract your entry from your stop loss in the case of a short sell order. But in a long buy order, you're predicting that the market is going to go up. So if the market goes down, that means you're going to be making loss. So therefore, your stop loss is going to be below your entry. And in this case, you're going to be subtracting your stop loss from your entry. So now your entry is 32.935. That's for the long buy, while your stop loss is 32.750. And you can see I put the stop loss percentage at 0.6%. Now let's see how I arrived at that. So take note, you are subtracting your stop loss from your entry in this case. Your entry is 32.935. So you come here, go to there, 32.935 minus your stop loss, which is 32.750. 32.750. This is what you get, 0.185. So you're going to divide this by your entry. What is your entry again? 32.935. 32.935. So like I always say, because you have this is actually the stop loss for percentage, but to get it in percentile, you multiply by 100. So 0.56, I approximated to 0.6. So I'm sure we all know how to approximate and how it works. Make sure you when you're doing this, you approximate to get the best figure. So 0.6%, that's how I got this. I'm sure you guys are clear on how to get your stop loss percentage on that. So now I'm going to show you how to get a stop loss percentage using trading view. You understand that, which is actually faster and automatic. But by the time I have explained how to use trading view, it can be more easier for you. But just watch and learn. So we're going to first start with the first trade, which is the WU USDT. What you want to do is to go to open your trading view. I'm sure most of us will have downloaded it on our phone. Once you open your trading view, this is what you see. So trading view, you can use it for forex, you can use it for crypto, you can use it for stocks and everything. All data is on there. So what you want to do is go to chart. You can see on there, there's watch list, there's chart, explore, ideas, menu. What you want to do is go to chart. So you go to chart, then you can see below here, that's just above the chart, they wrote AUD USD as what we call a pair. This is a forex pair, but a forex pair. So but we're trading crypto. So what you do is you click there, AUD USD, then you search for the pair that you're looking for. I'm looking for WU USDT. So you just type it WU USDT. So remember, like while trading, we have derivatives and we have spot. So because we are trading derivatives, we have to make sure that the chart we're looking for is the chart for derivatives. So on trading view, to get the derivatives chart, because it's USDT perpetual, so we just put .p, that is WU USDT.p. So it brings out all the options, all the exchanges that WU USDT derivatives exist on. So like we all trade on Bybit. Bybit is the exchange we use. So you're looking for Bybit, you can see WU USDT.p. You see Binance, Bybit, Mexi, and the rest. So we're going to select Bybit because you always go to analyze with the charts of the exchange that you're going to be trading on. You cannot be trading on Bybit and go and be analyzing the Binance chart, because these are different markets and there might be some differences in pricing. You understand? Although very minor differences, but it can damage your whole analysis. So just stick to Bybit. Click on Bybit, it brings out the chart. So next thing you want to do is draw your P&L diagram. To do that for the phone mobile app version, you can see under now, like here you have watch list, chart, explore, and ideas. And above, you're going to see a plus. Then you're going to see something like a pen writing, and that's like the editing icon. So you click on it. Once you click on it, you can see all the whole options. So there are some options that you need to get yourself familiar with, because you're going to be using it very often, which is one, you can see long position, and see short position, you can see rectangle, and you can see trend line. You understand? Then for more advanced traders, you can use fib retracement. But for now, the 4 tools you have to concern yourself with is rectangle, long position, short position, and trend line. Even as you're starting, you're going to be using more of just the short position and long position, because you're just going to be putting it there and making sure that your entry, stop loss, and take profit are balance, and you can see it's right on the chart. And the trend line is just to draw lines across. I'm going to do this demonstration. Click on trend line, so you can like move it anywhere you want to draw the line or something. Tap it, then draw it. You understand? So you can make it a straight line, make it a slanted line. So this you draw it. The least or technical analysis, you're trying to study and analyze the chart inside this. That's to draw a line. So you can also delete it. So you can click on it to delete it. You go back there to that pencil icon. You can click on rectangle. So this rectangle is, you want to focus. We probably want to focus on the point of interest, POI. Once you click there, you can drag it. It's going to draw a rectangle. You understand? There are other shapes and all, but we use rectangle mostly. Maybe you want to focus on a particular area and you try to analyze. All these are just analytic tools. So that's them. So, but now let's just focus on the long and short order. So this WU USDT is a short order. So it's a short position. So click on the pencil, select short position. This is a short position. So now what you do is you just take it somewhere close to where the price stopped last, then tap it. You can see it has come out. So now look, this is it. Now see what I was telling you, like in a short position, the stop loss is above the take profit. Now the stop loss area is one on red, while the take profit area is one on green, and at the middle of them is the entry. You can look at the sidebar now here. I don't know if you can see where I'm tapping on the screen. You can see there's a figure written in red, that's your stop loss. Then there's a figure written in gray as your entry price. There's this figure written in green, which is your take profit. So what you want to do, there are two ways you can do this. You can do this manually. The first one is you go to your signal and check. Your entry price is 0.6131. So you can come here and move this entry price in the middle. You can move it 0.6131. So, but this is stressful. You understand? It's going to stress before you can get it. You have to be moving small, and there's no time. So what we just do is, once you've selected the short position diagram, above options will come out. You can see not this one. No. This one is just the toolbar. So options is going to come up above. That's this particular one here. Sorry, this particular one here. So what you just click, you click on the three dots at the end of that bar. Click on the three dots, that's for settings. Click on it and you scroll down and go to settings. So it's going to bring out all the inputs for the short position. So first you want to do is your entry, which is 6131. Don't forget that the income, your profits on that trade was what? Take profit 0.5534. We're going to put it there. 0.5534. And your stop loss was 0.6425. Let's check to confirm. Stop loss 0.6425. Let's click OK. So it automatically aligns your short position diagram to fit the figures that you enter. So the first thing you want to look at your reward ratio. You can see there are three bars. There's the first one in red, then there's one in the middle that's in green, then there's the one that is also below that is green. The one that is below that is green, which details for your take profit. Let me move it. Details for your take profit. The one above is details for your stop loss. The one in the middle is general details of the trade. Now, there's what we call a risk reward ratio. I think I explained that before, which is your RR. You know, so you can see this RR is showing 2.03 right here. So what that means is that whatever you are risking on this trade, if the trade goes to TP, they're going to make 2 times of that. So this is very good for position sizing. It helps you calculate your earnings and know if you're making profit or losses. So let's say on a trade, I'm risking $5, meaning if the price goes to my SL, I'm going to lose $5. But in this case, because of this trade, the risk reward ratio of this trade is 2.03. If the trade goes to take profit, that means I'm going to be making $10 because it's multiplied by 2. You understand? So let me move this below. Now if I move this now to here now, you can see my risk reward ratio has changed to 4.14. That means for everything I'm risking, I'm going to get times 4 of that if this trade goes to take profit. So that's the thing about risk reward ratio, what you are risking and what you are getting. So most times people always say your risk reward ratio should be at least 3. 1:3. You understand, to be profitable in the long run, but it's not compulsory. You can, based on your analysis, you can just do 1:2. So you are using 0.5534. So this is what I want to show you, that you can move it, but sometimes it's slow. 0.5534. Now another thing you want to look at to get your stop loss percentage, you can look at above now, the red part of this diagram. On the details, you can see stop here, stop 0.0294. Then you can see in bracket 4.8%. If you remember, when we calculated ours, we got 4.8%, and now just automatically on the trading view chart, you can see you've gotten your 4.8%. The one in bracket, that's what you should look at for. That's your stop loss percentage. And even down for the take profit part here, you can see in bracket 9.74. That's your take profit percentage. Then here is your risk reward ratio. You know how much you're going to get, because you're knowing how much you're risking. You're risking $5. So if you get to TP, that means you're going to get $10, because it's 1:2 RR. That's what they call it, RR. So in case you see the term later, you're able to understand that. So now this is for WU USDT for the short order. Now let's draw this again for the long order that we had, which is the ETC USDT. So just like we did before, click here below, please. I'm sure you can see where I'm clicking because it signifies where I'm clicking. You're searching for ETC USDT. Remember, don't forget .p so that you get the exact chart. .p. So like I said, we are trading on Bybit. So just click ETCUSD.p Bybit. So it brings out the chart for you. So like I said, next you want to do is to draw your long position. Since it's a long trade, you're going to draw a long position. You click on that pencil icon and select long position. So put it there, long position. So now in this case, now I want to show you why I was subtracting. In the case of long, I was subtracting the stop loss from the entry, while in the case of a short trade, I was subtracting the entry from the stop loss. In the case of long, you can see that the stop loss is below the entry. This chart starts from up, and like here, this place, it starts from up and it increases as it goes higher. So the stop loss is lower, then the entry is here. So that means the entry is higher. This is the entry here. You can see it's higher than the stop loss. So you're going to subtract the stop loss from the entry. In case of the short trade, you see that it was reversed. The stop loss was higher than the entry, so that's why you're subtracting the entry from the stop loss. So that's what we did. Let's just go ahead and show you how to also get your percentage from there in this long trade. So like I said, instead of trying to move it and get it and you're trying to go slow, just go to the icon up here, this one that I'm moving around. Just go there, click on the three dots at the end of the tab, scroll up, click on settings, input all your figures. The entry price here is 32.935. I see it is, don't make mistake, entry price 32.935. Your profit now, I brought this order that has to take profit to explain how you can use to take profit. So when you see multiple take profit like that, you're going to use the last take profit. If you see TP1 to TP4, you're going to use TP4. If you see TP1 to TP2, you're going to use TP2 as your take profit. So you are going to be using TP2, which is 33.817. So put it here, 33.817. Then the stop loss is 32.750, and you see that we see the stop loss percentage that we arrive at 32.750. 32.750. Once you've done, just click on OK. You can see it has drawn it already automatically. You can confirm the prices from this bar here. You can see the stop loss 32.750 in red, the entry 32.925 in gray, and the take profit 33.817 in green. So now look at the stop loss percentage here. Sorry, here. You can see it is 0.56%. Oh, that's what we got before, but I abbreviated to 0.6%. You understand? It's always better to approximate 0.6%. That's how I arrived at 0.6%. So I'm just showing you this to make it easier for you. And you can see the risk to reward ratio on this trade is 4.77, which means if I'm risking $5 on this trade, if the trade gets to TP, I'm going to make $20 because 5 times 4 is $20. So that's why position sizing is good. It uses the risk to reward ratio model and helps you manage your risk effectively. So I'm sure you guys have understood this particular part. Now let's delve into how to enter the trade and apply the risk management and make sure you're not making any loss. So the first thing you want to do is go to your Bybit app. We're going to start with the Woo trade. So you go to your Bybit app. Wait for it to load. This video is very long, so you also have to find a way to watch it. So click on derivatives. Once you click on derivatives, okay, it's already on Woo, but if it is on BTC USDT, you just click there on BTC USDT, then search for Woo. So you can see Woo USDT perpetual. Make sure it's USDT perpetual, not spots. Click on it, then click on trade. Now look at it, it's in cross. The strategy I'm teaching is cross leverage, not isolated. So cross leverage, but let's leave the leverage from now. Let's do other things. So now it's showing market here, but what we are trying to enter is a limit order. So we click on limit. So once you click on limit, it's going to ask you for order price and order value. If it is market, it's not going to ask for order price because it's just going to use the current market price. So we're going to use limit, put in the order price, which is 0.6131. Then we'll put in the order value. How do you use order value is the most important part. How do you get your order value? Now for this trade, our stop loss percentage that we got was 4.8. So to get your order value, come to your calculator. 4.8% is just means divide by 100. You divide it by 100, you are going to get 0.048. Good. Okay, put that in mind. Then your affordable risk. Let's say this particular trade, I'm risking $5 on this trade. That means if price hits my stop loss, I don't want to lose more than $5. So you just put it 5 divided by 0.048. You can see that's 104. That means my order value will now be 104. You come here, order value 104. The next thing you want to do is go to T, share the root plus TP and SL. Go there. It's a short trade, so you go to short. So the first thing you want to check is your stop loss. Put your stop loss price. Your stop loss is 0.6425. You can see the amount that you are getting here. It is approximately just $5. So if this trade goes to stop loss, you are going to lose just $5. So that is what your risk management does for you. You're going to lose just $5. Then you can put your take profit, which is 0.5534. You can see when I told you it was a 1:2 risk RR, meaning if I'm risking $5, but if it gets to take profit, I'm going to earn $10 because it's a 1:2 trade ratio. So that's how this works. The next thing you do is click on confirm. Let's click on confirm. Then you can now come to your leverage. So the leverage, I always use high leverage for this risk management strategy. Please, I don't want anybody to come back and tell me that you are the one that told me to use high leverage and I got liquidated. High leverage, highest leverage only works with this risk management strategy to protect you. In the sense that this is 15x. I'm going to enter this trade twice to show you something. This is 15x. If let's put it to 10x save. If I enter this trade like this, just click on sell, because it's sell order, you're going to click on sell short, and I click on confirm, and I click on confirm. You can see how much left my balance. Let me cancel this one, and so I can show you. You can see what I have here is $44 in my available balance here. You understand? $44. So if I enter this trade, sell short, confirm, what has left? $10. You understand? That's because I'm using 10x. So it needs $10 from available balance to be able to amount at my order value of 104, because 10 times 10 is 100. Maybe be decimal, you're going to get 104. So but because you want to enter multiple trades, you don't want just one trade to just take $10 from your available balance and you can't use any amount from there to enter a trade anymore. If you do it this way, that means you can enter only just like 4 trades, and you won't have, even before you enter 2 trades, you won't have it to be showing you insufficient balance to enter another trade. So what you do in this case is you use the highest leverage. Let me cancel this trade. This one I put, let me cancel. So once you use it has gone back to 59. Okay, once you use the highest leverage now, and you click on sell short, confirm, you see that how much left in my account? Only $4. You understand? Because it only needs since it's 25x, a higher leverage, it only needs $4 to be able to amount to this my order value of 104. So you can see where the order value is very important, because once you put the order value, it's just like you've given a strict law and a strict rule that every other team must work together to amount at that order value, so you won't lose more than that $5 that you are risking on that particular trade. So that's it for risk management on a short order. Make sure you follow it, put your order value, place your trade, and everything will be okay. And that you need to watch out for when you are placing going on a trade, once you click on sell short, it's going to bring a confirmation page out for you. So one thing you need to look at is estimated liquidation price. Here it's showing 0.9264, and if you remember, let me go back and put this our stop loss. Remember our stop loss was our stop loss 0.6425. 0.6425. This was our stop loss. Confirm. So this is a short order, you understand, meaning the stop loss is higher than the entry. So what you need to confirm is that the estimated liquidation price is also higher than the stop loss. You know, so as you said, the liquidation price is 0.9264, stop loss is 0.6425. That means you have good. That means even though the trade is going is going against you, it's going to get to your stop loss and take you out of the trade before it even has the opportunity to get your liquidation price. So with this strategy, your liquidation price is also safe, but nevertheless, you need to always come back and confirm it and make sure there was no mistake there, so you won't lose money. So that's it. So we're going to go to the next trade, which is the ETC long. This was a short trade. We're going to go to ETC long. So come here, change this to ETC USDT. You can see the USD perpetual. So click on it, go to trade. You can see this order. Go to trade. So now, okay, there was something I forgot to show you for that wool trade. Let me go back there. Let's say, for instance, I give you a trade and it's market order. That means you need to enter at market price. What you just do there is you come here. It's still the same thing, but this is what you just do differently. Change to market price. So now, because market price varies, the market price I entered might vary with the one that you entered. You understand? So what I want to do is, I just maybe for my order value, I'll just put like maybe 500 in my order value. Just start from 500. This one is just like try by error, to do it sharp. 500. So once I put 500, I come to my take profit and SL. Go to short. My SL was 0.6425. Now this is where you want to look. You want to look at the value that is bringing us your potential loss. So that means with that order value, now if you hit your stop loss, you're going to lose $41. So, but you know that you want to lose just $5 on this particular trade. So what you just need to do is, you see confirm it, but go back here and reduce this. Reduce it to like maybe 200. Once you reduce to 200, come here and come to your stop loss position and check again. You shall see that reduced to 16. So but you want to lose $5, 16 is too much. You go back, you can reduce it to like, let's say 80. Once you go this 80, you check it again. You can see that it's gone to 6.5, but you want to lose $5, right? So just be tweaking it, reducing it onto maybe, let's start 50. So it has come down to 4.1. So when you want it to get to 5, you can just increase to 55. It's 4.5, just as you want. You can increase it, let's say 57. 4.7. I'm doing this so that you can go through the same thing. 59. Okay, 4.89. This is fair. This is almost $5. So you can now leave it like this and put your take profits, move your leverage to the highest leverage, and click on sell short. You can see, look at my estimated liquidation price. It's well above my stop loss. My stop loss is 0.6425. My liquidation price is 1.1819. So it's well above my stop loss. So I'm safe. Then you just enter the trade and confirm. So that's how you do it. This particular risk management strategy, when you are given a market order. Because if you are given a market order, you will not be given a stop loss percentage, because the time that people are entering the trade varies, and my stop loss percentage might be different from your own stop loss percentage. But what will remain the same will be the amount you're willing to risk on that particular trade. So you just be changing that order value with your stop loss position, because I'm going to give a stop loss, I'm going to give a take profit. But what I won't give is a stop loss percentage, because like I said, the prices that people are going to be entering market orders are going to be different based on the time at which the person entered into the trade. So the stop loss you're going to put is going to be stagnant. What you're going to be watching is the changes in this price that you're going to lose, and once it gets to the $5 that you want to lose, or close to $5, you can leave the order value. That way, in this case, I just needed 59 in my order value to be able to arrive at 4.8, which is close to 5. I just put some allowance. So that's the way it works for a market order, and it's the same thing for a long order. So let us go to that etc long trade and perform this everything from the beginning again, so you understand. So etc USDC, you go to trade. So it's a limit order. You can see the entry price is 32.935. 32.935. Then to get your order value, now I told you you're going to divide your affordable risk by your stop loss percentage. So now the stop loss percentage is 0.6%. So like I always say, 0.6% means that you divide by 100. Go to your calculator, 0.6 divided by 100, you're going to get 0.006. So you're going to divide your affordable risk. For me, it is $5 divided by this. So 5 divided by 0.006. So I'm going to get 833. So my order value automatically becomes 833. So next thing you want to do is come to your take profit and SL to make sure everything is working well. It's a long trade, so you leave it in long. Your stop loss, what is your stop loss? 32.750, all right. Put it there, 32.750. Can you see what the amount I'm going to lose? $4.6, which is approximately $5. You understand? Because I have done my risk management well and it's very tight. So if you make sure that I don't lose more than $5 and or maybe even less than $5, but it will never be more than $5 because of the risk management I did. So it's the same process. You just reverse it, then put in your take profit and every other thing. Then you confirm it and click on. Since it's a long order, you're going to click on buy long. Look at the estimated liquidation price. So in this case, because it's a long trade, your stop loss is below. I explained this earlier in this video. Your stop loss is below your entry price. So definitely you want your liquidation price to also be below your stop loss. So now the stop loss here is 32.750 written in red, but you can see the liquidation price is written in yellow and it's 30.916. That means it's below my stop loss. So price will definitely get to my stop loss and take me out of the trade, so that and it will never get my liquidation price. So those are the things you need to watch out for. For a long trade, your liquidation price must be below your stop loss, while for a short trade, your liquidation price has to be above your stop loss, so that your stop loss activates and takes you out of the trade before it ever gets a chance to liquidate. You understand? And another thing I want you to remember is that in a short trade, your stop loss is above your entry, while in a long trade, your stop loss is below your entry. I'm sure you understood that when I drew it on Trading View. Okay, let's see if this works. Okay, it works. So I'm sure this is for a long trade. This is for short trade. Sorry, basically the red area is the area of the stop loss. You understand? So you can see it's above and the take profit is below and the entry is in the middle. So that's exactly how it works. So now this trade is a limit order. So let's say this trade now is a market order. Now what you just do, like I said before, change to market, do your plus and minus. You want to lose just $5 on this trade. You can start here with like 500. Put your order value 500. Put your stop loss. What was the stop loss? The stop loss was 32.750. 32.750. So it's showing $17. You understand? This is for market order, showing $70. So what you want to do is to be tweaking this. You can reduce it by half, 250. Check it again, showing $8, which is far above what you want to afford your affordable risk on this trade. Reduce it again. Let's start with 100. 3.4. It has gone lower than that, so you have to increase this. Let's put 180. Is below. So you just be tweaking it like that until you get the value. This 5.4. Let's do 1.4. 145 is 5.06, and we can leave it there, but some people want it to be lower. So let's do 135 and see 4.7 or 140. 4.9. Hey, this is okay. So you just be doing like that until the value has gotten to like that your affordable risk for SL. And once it has gotten that, that will now be your order value. Then next you want to do is just buy long, confirm that your liquidation price is below your stop loss for a long trade, confirm every other thing, then enter the trade. Now what I want to show you is in a case of multiple take profits, you understand? So like in this particular trade, okay, there's a trade ongoing here now. This ETH USDT is ongoing. So if I want to take put in my other take profits, maybe price is going now and that's gotten to my TP2, you understand? I didn't activate what I put, that's gotten to TP1. I put TP1 and TP2. So what I used in the trade, when I was setting up the trade, what I used on my take profit was TP2 because that's the highest take profit level. So that's what you're going to use at your major take profit. So let's say you are watching the trade and you've seen that price has gotten to my TP1. You understand? What you just need to go there is go to click on close buy here. Once you click on close buy, you can select, if it's on market, that means you want to close this trade immediately. So, but you can select the percentage of the trade you want to close. You want to close 10%, 25%, 50%, 75%. You can do that as taking partial profit. You understand? Then you can also close 100% means you want to close the trade manually on your own. That means it has not gotten to take profit, it hasn't gotten to stop loss, but you want to just close the trade. Maybe you've made enough profit, or you're making losses and you are scared that you don't want to make more losses, you just want to close the trade. So you just click 100%, then click confirm, the trade will be closed. Or if you want to like automate it, you're going to click on limit. Maybe you're not going to be with your phone and you want price to take out a partial profit when it gets to your TP1 without you being on your phone. So what you just put there, you go to the close price, you input your TP1, whatever it might be, maybe 3, 5, put your TP1. It tells you, okay, this is the expected profit you're going to get. You can see it below here, 6.7413 and all that. Then you select if it's 10%, 25 or 50% of your position you want to close at that point in time. Once you select 50%, it also tell you how much you're going to get, and you click confirm. So this will now set it as an order. So even though you're not with your phone, once market gets to this price, it automatically takes out partial profit. So it's a way to automate your partial profit, and in cases where you have multiple take profits. So if you can, let's say you have like up to TP4 now. So let's say your TP1, you can say, okay, TP1 take 25%, you set it. You put your TP2. Maybe TP2 is like maybe 3, 4. You understand? Maybe TP2 you want to take 50%, you set it. If you have TP3, you put your TP3. You select the percentage you also want to take at TP3. So all this, once you are doing that, you automate your trade and set those take partials as orders. So even if you're not with your phone, once you get to those take partial levels, it takes the amount of profit that you've stipulated, whether 10%, 50% and all that, it just takes it out. So that's the way that works. I don't know if I'm missing anything, but if I am, we can discuss it in later videos. So basically that is risk management, and it's going to save you a whole lot of money. So watch it as many times as you can, as you want, and to make sure that you understand how everything works. So hopefully I'm going to teach us how to use TradingView. TradingView is a very important tool that every trader needs to learn to be able to analyze the market. So see you again sometime, anytime. This video is going to be long, so we all spend money downloading movies, so I'm sure you can just use data to download this video and watch it once and for all and understand this. I have a feeling I'm forgetting something, but nevertheless we can always do more videos to add it. So just for reminders, when setting your trades, make sure you're using a cross leverage, and if you're using this particular risk management strategy, make sure you use the highest leverage available so that it will minimize the amount of money that will be deducted from the available balance for that particular trade. So see you guys again next time sometime.